Hey, welcome back, everybody. So, this is going to be the watch list for Monday, January 12th. Hard to believe that we are now back upon earnings season. So, as always, what's going to kick off earnings are going to be the banks. And this is probably going to be one of the most important bank earnings seasons in the last 2 to 3 decades. Why is that? Because banks are now trading at an all-time multiple high. Normally, an average bank would trade for 1 times book value, meaning if you liquidated the bank and sold all of its parts, you would get dollar for dollar. Now, if you had a premium to book, which is what banks get bought out at, a premium would typically be 1.5, 2 times book. Some of these banks are trading at 2 times book, 2.5 times book. JP Morgan Chase, if I'm not mistaken, is trading at 3 times book value. Meaning if you liquidated Chase, you could sell all of its pieces for 300% of the actual underlying value, which is absolutely insane. We have not seen these kind of valuations since the late 80s, early 1990s, okay? So we have Chase, Bank of New York, Wells, Citi, Bank of America that are going to all be kicking off earnings that we're going to want to pay very close attention to. Then after the money center banks, we're going to have Goldman, Morgan, and then the regionals will follow. So your regions, your PNC, your M&T, so on and so forth. So this is going to be a big week of what is the health of the economy? What is the strength of the consumer as we move into 2026? So do not sleep on the banks. Now, the hard part with banks is Trump came out on Friday saying that he wants to cap credit card interest rates at 10% for 12 months. Now, if that happens, I can assure you, these banks are going to sell off because they make billions of dollars in not only interest, but the fees on those credit cards. So, why are interest rates so important when it comes to credit cards? Well, when you think about it, the higher the rate, the deeper they can write into the credit. Meaning you can have a 680 or a 660 or a 640 FICO score and still get a credit card. Why? Because they know you are going to not only run up that card, but you're going to keep an outstanding balance that they can charge you 30% on. Now, if they can't charge 30%, then they can't underwrite deep into the credit cycle. Why? Because there's going to be more charge-offs, right? They charge 30% because a percentage of all the people with a 620 or 580 FICO are just going to file bankruptcy. They're not going to pay back the card, so on and so forth. But when you charge a 30% interest rate on the entire population, you can make up for those losses. If they drop interest rates to 10% across the board, you can no longer absorb losses from the bottom end of the spectrum that they already approved. So what will they do? They will shut down those credit lines. They will start to push those individuals out. They will start ramping up their collection efforts a lot faster. So while the banks might come down, what would move to the upside would be alternative lenders, and Afterpay, a Klarna, a SoFi, potentially, okay, that could benefit. So we're going to look at the banks in greater detail later on in this presentation. So let's keep an eye on the financials. The next piece is economic news. Monday, we really don't have anything other than some Fed speak. Not worried about that. Tuesday is going to be a big day. Okay, so we're going to have CPI. So we're going to be back on the inflation bandwagon. We're also going to be looking at new home sales and the U.S. budget deficit, which we already know is a train wreck. Wednesday, we have more inflationary data with PPI. So CPI is a consumer price index. PPI is the producer price index. So what is it costing for manufacturers to create goods to sell to the American people? Thursday, we have unemployment, so we have jobless claims, and we're finally getting back to the norm with the government being back open, that we're getting a constant source of news flow. And then Friday, Not much. Industrial production, capacity utilization, not expecting those to move the market, but your big day is going to be bank earnings throughout the week, starting Tuesday, Wednesday, Thursday, combined with government data. Again, Tuesday, Wednesday, Thursday. Okay, everything is kind of lining up perfectly. Now, let's look at the market itself. We are trading back at all-time highs in ES as well as SPY. SPY doing a check back to the price level, which was this prior top here last week on January 7th. So we'll want to see, can they keep the momentum to moving higher into the 700 range, or are we going to get a necessary pullback to something that's maybe a little bit more realistic? So what I normally don't like to see is the bank stocks running up into earnings, because they are literally priced to perfection, okay? So if they start to falter and start to miss and guide lower, then the overall broader market typically struggles. Now, while SPY is making new all-time highs, QQQ is not, right? The all-time high for QQQ is all the way up here at 638. We're sitting at 626. So what I would want to watch for is a break of this pivot high, which if you want, we could even drag it left here, right? And you'll see here, again, back on January 7th, before we got a little bit of a move lower, we are now trading between these ranges. So I would watch for a potential hold, possibly at this 21 EMA to go higher. Or the other thing you can look at too is, well, what is the fib level between prices? So we definitely are going to want to see us hold this 626.37. Now, again, depending upon how the market opens pre-market, as a reaction to the credit card issues, it could drag down the market before the bell even rings. So I'm going to keep an eye on those price levels, and we'll save that one because you can see that we are clearly defined between two price levels where we were rejecting in the past and heading higher. Okay, let's take a look at some of the tech stocks. Apple still kind of struggling. I really thought last week, and I did take some Apple puts back here for the gap fill, but we never got the fill. And the primary premise for that was the market was just too darn strong, right? Apple was weak. It was gapping lower. Looked like it was going to go for this gap fill. We never got it. So we did catch a nice scalp. Actually, we caught a couple of them during the week, but nothing monumental that I really would have liked to have seen. So I'm going to keep this on my radar for more pressure to the downside if we have a weak market. Amazon had great relative strength pretty much all week long, lower left, upper right. This was a trade that I clearly fumbled, getting into the calls and then selling them way too early, where this trade went up not only 300%, but right now, if you were to look back on it, it's up over 500%. And they still have strength to the upside in Amazon. So this one, don't sell this one short. Wouldn't chase here necessarily between price levels. Let's see if we could at least get a pullback. Somewhere we're pretty darn close at the 246 interim level here on a 15-minute. Let me look at a 4-hour. This 4-hour looks good, right? This candle high, this candle low, right? And if we can hold this level with potentially more strength and movement to the upside, but this is definitely not one that you want to be shorting. This is where we really want to look and say, can we get a good long position moving to the upside? Okay. Let's go ahead and take a look at Microsoft. Microsoft was kind of back and forth last week where we were having our highs and our lows. I'd probably, again, steer clear of this name. I really don't see anything that I love with it. What I would do is take a look here for this potential fib reject from this pivot high to this pivot low. We got a little bit of a ways to move to the upside. It does have some, overall relative strength. Nothing that I really want to chase one direction or the other. We are getting some healthy pullbacks, right? You can kind of see the trend line that's been forming from this to the downside. So let's go ahead. We could even throw that on there, and you can keep an eye on this if you want for potential entry between price levels, right? Just watch and see, how does this hold here, okay? Moving to the upside. And will we get ourselves into the wedge and then eventually break out? But I do like the breakout above 480, knowing that they'll probably move higher through this fib level, and then possibly 483 would be the upper price target. So look at Google, Another really strong contender last week, pushing up to new all-time highs. So let's go ahead and mark out some of those so that we have them. Again, you could actually see this pivot here is where, again, it started to struggle back from January 8th. So this, again, we want to get above this 330, hold this pivot low to the downside, or we could be, again, on a weaker tape, be heading lower. But this isn't one that I would necessarily want to short. It's just been too strong, right? And every dip, they just buy it up. So while you can look for some puts below this prior pivot here, just be ready with a stop loss in profits. And then let's take a look at the overall supply and demand. We probably do have quite a bit of demand, but obviously it's lower. So make sure you can get below this pivot low here, okay? And then you can take your puts back down into demand, and then you really start to get some heavier demand once we get closer to the 319 level. So not to say that it's not a doable one, but you can see every dip right below the price level, buy it up. Right below the price level, buy it up. So that's why I would really want to see us lose this price level here at 328. And I'm going to get rid of this other one in order to go short. But we really don't have any buyers here. So I think this could play out, but just be careful, okay? Let's take a look at Tesla. Tesla, a lot of selling last week and then a lot of buying. So this one, yet again, was back and forth. So you could see on Tuesday, heavy selling, right, as production numbers came in, as we got numbers out of their competitors in China. Right now, looks like we are kind of rolling over to the downside. Now, we're going to have to watch this 445 to see, do they hold this to push this up to 450 and then back to 500? But right now, if we stay under 445, I would definitely be thinking that puts would look better than calls. Now, if we can curl up on this, okay, on a higher time frame, then they are definitely going to take this one higher. So watch this price level here. I'm going to go out to a 4-hour. I just want to see where we have maybe a better pivot to say where would be a good short. And again, looks like they've been kind of holding this area here. So let's do one more thing for the fibs way up top. So the 50 fibs going to be way up here. We got a ways to the upside in this one, guys, if they can hold momentum. So again, if market is strong, I like a call entry better than a put entry, but I'd really want to get us back above this 444.98, 445. Okay. Let's take a look at Meta. Meta's been relatively weak. Really not doing anything. It was mostly in a downtrend last week, heading lower. So this one, we're in between price levels. I definitely would think that if we can't build some momentum in this thing soon, you could look for a put trade to go lower. Now, be careful, though, because you're in 1 month overall demand. You have demand forming. So your best put is going to be up here at 457 rather than trying to take it midstream. But again, this is just back and forth. It's kind of like your Microsoft, right? It's not doing a whole heck of a lot to the upside, and it's not doing a whole heck of a lot to the downside. So NVIDIA's been interesting, right? They've been running it up pre-market and then selling it off. So this one, we are in a fair amount of demand right here with a lot of consolidation. Let me turn this off so we can get a better view. Definitely a lot of consolidation here. Every time, again, if you were to try to short this thing, you're pretty much getting wicked right back to the upside. So again, I would be careful on this one. We do have a little small gap to the downside here, which could fill, but we really need to see some overall weakness. And you can see what they're doing here on a 4-hour time frame, right? Every time this thing starts to dip, they are buying it right back up here at this 183 price level. So I would want to see us get below this recent pivot right here to actually go short. Otherwise, this is going to be your long entry. And again, why would that be? Well, we have a lot of buyers that are just sitting here, at 183, looking for this thing to go back up to 200, right? 210, 220. Again, it's really hard to short this when you're in 1 day total demand, okay? So you're better off being patient and saying, I like calls versus taking the puts. AMD was weak this week. as well was weak this week. That's a tongue twister, right? But below 203.01, I do like puts. Huge gap fill down here. Really nice size of this gap too. 195 all the way down to 170. So we have a lot of downward pressure, but we'll need to get below and then start moving lower. This one I would definitely keep on your watch list for puts. If we're starting to see some weakness in the semiconductors come Monday or Tuesday of this week. So let's take a look in where we're at with an overall supply and demand perspective. If we don't have a lot of buyers, which we do up until the top of the gap, and then we don't have anything heading lower. So that's where you can feel pretty safe once you get here and start to enter this gap for the continuation lower. And I do need to fix this gap because we got a candle wick right here that we want to pay attention to. Okay. So this looks good as well for a potential short. Just note, if you get below, right, we have a lot of buyers sitting down here. So again, if we have strength, this would be a good entry for some calls. And you can see how the market reacted on that at Friday on the open, right? We had strength and we moved higher. But what I don't like is that the market was super strong and it failed to move to the upside. So let's take a look at Oracle. Oracle caught a bid on Friday back up to the $200 range. Yep, if I'm not mistaken. This one, if we hold 198.31, look for this to go to the gap fill to the upside. Okay, so we're looking at AMD gap down. Oracle potentially gap up. Now, what was super strong on Friday was energy overall, as well as data centers. Okay. So they're holding this quite nicely at this price level. We do have some sellers, but we really don't have more sellers until we get through the top of the gap. So this one could be a good long entry. What I would be careful of on the 15-minute, right? You do have a curl on the MACD to the downside. But this one, again, if they're able to hold that level, I think you could do relatively well. Let's take a look at Palantir. Palantir caught a really nice bid for a moment, and that the government was going to double their defense spending. Okay, but we are now right back within this channel. So we really didn't accomplish much on Friday. On Friday, got a nice, really good push higher, and then what did they do? Sold right off into it, right back to the price level of 176. We're in between levels. Wouldn't do anything right here. I really want to see us get below 176 or get above 178. Okay. Let's go ahead and take a look at some of the banks. So as I said, banks are going to be earning. JP Morgan Chase is trading at an insane multiple. Now we are again yet back in a channel. So I would watch and look for some weakness in this one if you were potentially going to want to take a put entry to the downside. You can see where they used this pivot high was also this pivot low to go to the upside. So again, very expensive, trading at a premium. This one could potentially have room to the downside, but you are fighting with strength. Let's take a look at Bank of America. Bank of America, very similar situation, right? Trading at these insane price levels that we haven't seen forever. And we have a nice trend line here, though. So what I would watch for is a break of trend with a retest back to the pivot. Okay, pivot here, right? You could add a pivot here if you want at 53 and change. We'll go ahead and do that. And then just trade this thing level to level, right? If you get weakness to the downside, you can see clearly where we are most likely headed. But again, with banks, you also have to be careful. We got a lot of buyers. There is a lot of bets that banks are going to do really, really well in 2026 with easing regulatory oversight. Okay, same thing here on this Wells Fargo. You could kind of see it. Watch this trend line right here. Okay, see if they hold this trend for a bounce higher or a reject potentially lower. Again, a lot of the banks I think are going to be driven this week on this credit card news on Monday, and then we'll see what really comes to fruition once we get the overall earnings. SoFi had a 10% drawdown this week because they issued more equity at $27 and change, right? So when that news hit, right, the market literally sold it off 10%. You did have a good dip buy opportunity here. We pressed back up, but we're literally in between price levels. So I think we need to get above this 28 to go back into the 30s, but if we break below 26 and change, I think we could definitely head lower in this one. Goldman Sachs, trading at almost $1,000 a share. I think if this one breaks below our pivot of 932, we could see 914, which was a pretty decent prior support zone on a 4-hour time frame right back here, right? So we could definitely see that this thing is overextended. And that's, what I mean by that these banks are trading at these premiums we haven't seen forever. I mean, banks don't act like tech stocks, right? And so when they go up, you don't want to fight it. But when they come down, they usually come down pretty damn fast and they come down hard. If credit cards get reformed, Capital One is going to be the most impacted of all the banks, right? Because it is let's face it, it is a credit card bank. That's what they are, Capital One Financial. You guys have seen all of the ads, and you probably carry one like I do in your wallet. So this one would have the most amount of downside potential. So if you're going to play the banks on weakness, especially off credit card news, Capital One. Or your alternative is going to be American Express. Now, American Express, less likely to be impacted because they serve a very affluent clientele. But you can see we got a good trend line here at Amex. We're trading back at these all-time highs. So let me just make sure I got that right. Yep, we are at all-time highs. American Express has never been this high in the history of the company. Okay, look how far back it's going. But look at this thing to the upside. I mean, talk about craziness. And they haven't missed earnings in, 2 years, right? The last time they missed earnings was going to be back in December of 23. Okay, so we definitely have a ton of strength in banks. I would not be chasing them here to the upside. Again, why would you chase something when they're so expensive compared to their own stock, equity, and valuations over time? You wouldn't. You would actually look for the weakness to the downside. So again, you can see these things don't function really well. We need a news catalyst to push it one direction or the other. But for all of the banks, again, just watch your trend line, watch your pivots, right? And then when they move, they typically move pretty fast. So make sure you put your stop into profits. And with that, that's everything that I'm going to be watching this week. And I look forward to seeing you all tomorrow morning for live trading at 6 a.m. Pacific Standard Time. So with that, everybody, have a fantastic Sunday, and I'll see you all tomorrow. Take care.